Namaste all and welcome to the channel of Investment Advisors. As part of our Market Vision series, we discuss on market performance and how to plan the trade each single day. All the world markets turned positive after the tariff pause announcements by the US government. Indian equities too rebounded strongly with Nifty 50 surging 1.69% and Sensex rising 1.49%. This was majorly fueled by bargain hunting and positive global cues. Market sentiment was boosted due to tariff pause by US and expected planned negotiations. There is also an anticipation of RBI rate cut as far as tomorrow's RBI policy announcement is concerned. The sentiments across the world has changed. Japan's Nikkei led the gains with a 6% jump after the initiation of tariff discussions. Despite cross-tariff tensions between US and China, still Hong Kong's Hang Seng rose 1.5% and China's Shanghai Composite Index gained 1.6%. European markets too rebounded sharply in the range of 2 to 3%, which offered relief to the global markets. As we speak, US markets are presently trading flat post the announcement of additional 50% tariff on China from April 9th. Crude oil continued to slump. The fall in the prices has touched to its lowest level since August 2021. This was majorly led by concerns that US tariffs might depress the demand and lead to a global recession. Now let's try and understand how the indices are shaped and what does the open interest talk for tomorrow's trade. So we are in Nifty 50 index. So as you could see from yesterday's almost higher level, the markets open in positive and continue to rise extreme towards 22,700 odd levels. And from there we saw some sharp fall, and then now markets are in trade lock where the sellers are also heavily uh, shorting from the higher levels, and also buyers had emerged at the lower levels. So each time Nifty tried falling below the median for today, it continued to have good uh, uh, money pumped in at the lower levels, which has led the markets to again rebound from all the lowest levels that we have had seen today. So each time the market was falling, there was continued support that was provided from the put writers, which has helped the markets to further close at the higher levels. Though there was, sharp sell off at the higher levels and then, significant buying at the lower levels, we are still in an indecisive zone where tomorrow, if the market opens and despite the positive news from the RBI governor on the rate cuts, we might not maybe close above the highest levels of today, that is 22,700 levels. So despite the positive news, we might trade in range bound zone. This is what is visibly seen as far as the markets today is concerned, and the global markets how it has traded. Now, in case if there is more than 25 basis point rate cut, then we might see a good positivity in the markets, and Nifty can surely touch 22,800 levels and above. So tomorrow's RBI announcement is going to be significant. Based on the verdict and the future rate cuts, uh, the markets will, take decisions whether it is going to be bringing a lot of positivity, despite the world markets may not be, showing that strength or performing really well. Our markets will surely shoot up and continue to go higher highs if there is a 50 basis point cut, which is very difficult given the anticipation of recession across the world markets, and lot of tariff hikes, so which might, definitely lead to a spike in the inflation. With higher inflation, reducing the rates is going to be difficult. So maybe we can expect 25 basis point, which is already priced in, and we may not see the market, moving beyond 22,600, 700 levels for tomorrow. Let's understand from the perspective of open interest now. So already at the higher levels, that is 23,000 levels and above, we see there have been good call additions that has happened. So the higher the call additions and a lot of um, positions being built, this definitely talks about the resistance getting strengthened, where Nifty may find it really difficult to breach 22,600 and 22,700 levels. So this is where we will have to closely monitor, because there have been almost 70% of put additions that were done at 22,500 levels, which acts as a strong support as of now. The moment Nifty starts falling below, we surely do not see any strong supports coming in. So we eventually can, fall down until 22,200 levels, and maybe there could emerge a strong support tomorrow, given that we have weekly expiry too. So from the perspective of PCR, we are zero point 0.7 overall and 0.64 at the money. So this is not something positive. So that is when we anticipate that tomorrow's session is going to be just a range bound session with good, spikes on both the sides, which might, take the stop losses of the traders. But we might not see a strong rally nor a sharp drop. Now let's understand from the perspective of Sensex. Sensex 2 has opened positive, and from the previous highs, it continued to rally further and reached the highs of 74,900 odd levels. And from there, we saw a sharp drop or sell off that had been seen. And then, because there was an expiry, so there was a collective effort from all the market operators to ensure that they gain huge, profits in terms of sharp decline in the premiums. So tomorrow same thing will happen with Nifty too. We already see VIX is trading above 20. After the RBI announcement, there is expectation that there would be a sharp drop in the VIX, which will erode the premiums tomorrow. So we might also see good erosion of premiums on the coming weekly expiry for Sensex too. So as long as Sensex trades above 74,800 levels, we continue to remain positive. If it starts trading below 73,600 odd levels, then that is something worrisome, and we might continue to see further drop in the indices. But now that we have already seen the worst of the news in terms of tariffs, in terms of inflation, in terms of recession, so expectations are that we might start, taking a good support at these levels, and then, gradually start rebounding from, you know this week, maybe coming week, which will surely help our indices to break the previous, resistances what we had around 78,500 levels. But yeah, from the current levels to reaching those levels, it is pretty far. But then if there is no negative news that is expected to come in as far as April month expiry is concerned, we might surely reach at least 2,500 to 3,000 points by the end of April month itself from these levels. So let's understand from the perspective of open interest. So we have already seen a sharp additions in the call side. So at 76,000 levels, we see good additions that have been done. However, since this is just a start of the weekly expiry, so we might see more positions getting built from tomorrow's trade, which will help us to navigate effectively to understand where the market is inching towards and how to plan our trades accordingly. So as long as we told if Sensex trades above um, 74,000 odd levels, then that is considered as positive. And as far as markets do not overall fall, broader markets, we might see not a big fall coming in, but gradual recovery is surely expected from these levels until the end of April month. So talking from the perspective of PCR, overall it is 1.1, which is very positive, and at the money it is zero point 0.8, which is still okay. This might definitely help the markets to trade positively in the coming days. Now let's try and understand from the perspective of Bank Nifty. As I had mentioned previously, if markets were to recover, it is Bank Nifty and financial services indices that are expected to recover sharply compared to the Sensex and Nifty index. And the same was seen in the last 2 days. There was a good rebound that was done in the markets, and we are already at the higher levels of 50,800. So as long as tomorrow it trades above 50,800 after the positive announcement from RBI, there are good opportunities to continue taking long positions and keep those positions until the end of expiry. So we anticipate that by the end of the expiry, markets would already cross this previous resistance level of 52,100, and there are high possibilities that we might close somewhere in the range of 52,800 to 53,000 odd levels. So compared to other indices, Bank Nifty seems to be quite strong, and there are major top banking stocks which are showing a lot of strength. So this in itself is a positive, for the overall Bank Nifty index. Now let's talk from the perspective of open interest. So open interest at the higher levels like 52,000 and 53,000 levels, we see small call additions, which talks about that Bank Nifty may not approach or reach to these levels by the end of April month expiry. However, with the positivity that we already see in the charts, there are high possibilities that 52,000 can surely be taken out. Maybe reaching 53,000 would at this point in time might seem to be difficult. So at all the lower levels, we see a good puts have been holding. So this in itself says that as long as Bank Nifty tries to touch the lower levels, there is immediate buying that happens at each of those lower levels, and that it in itself gives a lot of strength and support to Bank Nifty at each fall that we have been seeing. So now we see good strength that has already emerged at 50,000 levels. So now across all the levels of 500 points, we see there is good uh, calls as well as put positions that are being taken. So this continues until 53,000 levels. So there is a lot of positivity that is seen in the Bank Nifty index, which definitely will help the Bank Nifty to move at the higher levels once it starts crossing the critical hurdle of 51,000 levels in the initial stage, and then gradually 52,000 levels, where we still do not see a lot of put writing that has happened. So the more the open interest that increases on the put side, the more confirmations that we receive that there is a strength that is emerging at each of the higher levels on Bank Nifty. So talking from the perspective of PCR, it is overall zero point 0.8, and at the money it is trading as 0.93, which is showing some strength and positivity. Now let's talk from the perspective of FINNIFTY. So FINNIFTY has again shown good momentum and strength from the yesterday's closing, though at one point in time FINNIFTY started trading below the previous day's high. However, it quickly rebounded and ultimately closed almost 50% of that particular level. So this talks a lot about positivity on the FINNIFTY. So in tomorrow's trading session, as long as FINNIFTY is trading above 24,400 levels after the RBI policy announcement, we might continue to remain positive. And if it sustains and covers this gap, then that in itself will show a good strength for the further trading sessions. So if the gap is filled tomorrow, then we might see a strong rebound and recovery, which will continue overall until the end of expiry, and we might soon cross this all-time highs too, somewhere in the mid of April or the third week of April month. So from FinNifty and Bank Nifty perspective, there are a lot of positive, expectations. And from the perspective of the open interest positions too, we could very clearly see that there are high possibilities that markets, if it rebounds, these two indices would be the first to immediately touch to its previous 52-week high. So now let's try and understand from the perspective of open interest. So good put positions have been held despite the markets had lowered 2 days before, and then from there we saw a strong rebound. So with every rebound and good put additions that we could see, this shows that it is really difficult now, uh, or maybe this entire expiry, for FinNifty to start trading below 24,000 levels. So as long as FinNifty is trading positive and above 24,000 levels, we can continue to remain in the longs. So longs could be by taking majorly shorts in put, which will help at the money put, or maybe little bit of out of the money, which will help you to not lose despite if the world over markets start maybe weakening further. So only at higher levels of 25,000 is somewhere that we can expect some sharp sell-off that is expected to come at 25,000 levels and 25,500 levels. Till then, it's going to be very easy for overall um, uh, FinNifty to reach or approach 25,000 levels, because we see a lot of put positions being there at the higher levels too. So at each of the higher levels you see a lot of put additions that have happened. So this in itself talks that markets are expected to recover majorly in April month and close at the higher levels. So from the perspective of PCR, it is trading at 0.8, overall and 1.606 um, for at the money. So this in itself is a lot of positivity for FINNIFTY, and gradually in a week's time we will be able to see a lot of put strengthening that is expected to happen at 24,500 and above levels. Now lastly, let's talk from the perspective of FII and DII um, investments. So FIIs in index futures are short by 1.09 lakhs. On stock futures, they are continuing to hold those 15.68 lakh long positions. On call options, they are long 5.3 lakh contracts, and on put options, they are short 6.08 lakh contracts. So net 77,682 contracts FIIs are short. On proprietary traders, on index futures, they are mildly short. On stock futures, they continue to be long by 4.23 lakh contracts. On call options, they are heavily short by 1.43 lakh contracts. And on put options, they are mildly short by 51,348 contracts. So net proprietary traders are also short by 91,747 contracts. Um, so both FIIs as well as proprietary traders both are short for today's closing. So we have to see maybe how the market is anticipated to trade post the positive RBI announcement. On the other hand, client is long by 35,000 contracts on index futures. On stock futures, they continue to remain bullish by 18.3 lakh contracts. On call options, they are short by 3.87 lakh contracts. And on put options, they are again short by 6.12 lakh contracts. So net retail traders are long 2.25 lakh contracts. So FIIs are short, proprietary traders are short, whereas client is long, and despite their long positions from last 2 days, markets have recovered, and this has given a lot of profits for the client. Now lastly, from the perspective of stocks, so DIIs are long by 3097 crore in cash market, and FIIs are short by 4000 uh, by 4994 crore in the cash market. So as long as either of these major institutions are long on markets, our markets will stabilize and continue to build that strength. And it is difficult to have sharp downfalls as long as either of them sustains and comes to rescue when there is a big downfall that is expected to happen. So overall, tomorrow's trade is going to be in the range bound scenario, somewhere in the range of 22,300 odd levels to 22,650 odd levels. So despite the RBI rate cut announcement, in case if RBI do not cut the rates, then we might see a sharp drop of roughly around 300 odd points tomorrow itself. So we might come and settle down at 22,200 or in the range of 22,300 odd levels if there is no rate cut. If there is a rate cut, maybe in the range of 22,400 to 600 odd levels. Yeah, so trade cautiously tomorrow. Don't maybe take any positions on uh, you know as a buyer, because since the VIX is high above 20 levels, so there is going to be a sharp erosion in the premiums. So if you tend to be a buyer, be cautious. So once the premiums or maybe VIX erodes, then again, it is better to be a option buyer, because we anticipate to see a lot of volatility or movements that is expected to come in. That's it from the perspective of analysis for today. Let's see how the market is expected to open and trade overall tomorrow. So until then, thanks. In case if you like our analysis, kindly like, share and subscribe to our channel. Thank you.